We now calculate the reserve for unexpired risk. We are going to look at this adjustment over here about what it says related to provisions for this unexpired risk. What is the additional reserve? Okay, and we will accordingly do the calculation over here to see or show how much are the changes in the provision for unexpired risk. Okay, let's see. Um, Now you need two things: opening balance of the provision and what is the reserve for the current year. Let's see what is given. The balance of fund on 1st of April 2017, they are saying was rupees 26 lakh 50,000. That means opening balance as of 1st April 2017, right? And the amount was 26 lakh 50,000. Also another information is given to you that this is inclusive of additional reserve. Sometimes these businesses, they do make an additional reserve, okay, over and above the one that they are supposed to maintain, all right, and this includes the additional reserve of rupees 3,25,000. Let's just mention that information there. Okay, now next we have to deduct what is the reserve for the current year, that is as of 31st March 2018. Okay, now in this problem we are not directly given how much is that reserve, we are needed to calculate. So they are saying that additional reserve is to be maintained at 5% of the net premiums of the year. So what are they doing in this problem? They are not giving you the percentage of the actual reserve, okay, but additional reserve is given and it said it is 5% of the net premiums that we have calculated. We'll come to the additional later, but for now under this reserve for current year, we are supposed to calculate what is the actual reserve. Okay, so what we will do here is I'll make another inner column so that we can calculate those amounts and write them accordingly. Let's bring this over here. Okay, now understand that this whole balance of opening balance, it includes two things: the actual reserve that businesses, insurance businesses are supposed to maintain as per the law, and some additional reserve that they themselves have maintained. Okay, now what is this actual reserve, and if there is no percentage of the reserve given in the problem, how much are you supposed to consider? It's just like if you remember, for statutory reserve in case of banks, we used to consider a flat rate of 20% as the statutory reserve, right? Irrespective of whether or not it was given in the problem, we would still consider that 20%. Same way you have to remember this provision now. Okay, I'll just write it here so that it's available for you later when you are going to revise. So reserve for unexpired risks, when not provided in the problem, you have to consider on marine insurance, it has to be 100% even if not given in the problem, and on fire, cargo or any other type of miscellaneous insurance, okay, you have to maintain it at the rate of 40 to 50%. Normally we take 40% if nothing has been provided, okay, but around 40 to 50% is other rates that are given in case nothing is provided in the problem. So you have to remember this. So in this case, this business is of marine insurance, right, and you are not given how much is the current year's percentage of unexpired risk, right? Even last year's is not given to you. So we assume that since nothing is given, the provision, that is the actual provision, will be made at the rate of 100% of what? 100% of the premiums. The premium we have calculated is 25,65,000. So always maintain, in case of marine insurance, a provision of 100% in the absence of any information given. So 25,65,000 is the provision. To this, you have to add your additional reserve. Now this percentage is given in the problem, right? We are told additional reserve to be maintained at 5% of the net premiums. Additional reserve is what companies maintain over and above the required provision rate. Okay, so this 5%, if we calculate 5% of 25,65,000, we get 1,28,250. Is that clear? So now a final reserve for this year after adding the actual and the additional is going to be 26 lakhs 93,250. 26,93,250. Okay. So total provision. Now what we have to do is, we are looking at changes in provision for unexpired risk, right? I will just give this bullet points so that it is not confused with the entire total. Fine. So opening balance is 26,50,000 minus the current year's balance 26,93,250. Whatever is the difference, that is our changes in provision for unexpired risk. Okay, and in this case the difference we are getting is 43,250, but a negative figure. That means current year's reserve is clearly more than the previous year's reserve. Fine. So where does this go? This amount will come here as changes. 43,250 negative balance, so clearly it will be minus. Fine. So we have all the amounts now in the revenue account. So 25,65,000 plus 12 plus 5,000 plus 139,500 minus, this is a negative, so minus 43,250 gives us a total income of 26,78,250. Done, this total. Okay, and here incomes, all the expenses, sorry, 1781, 147, 341. Then you have other expenses like income tax, 2,40,000 and 5,000. Okay, so this total is 25,14,000. Done. So both of these, this is your income total, this minus the expense total will give you the operating profit of 1,64,250. This is clear? So this is how we work out all these other adjustments that are given to us, and how we have to consider insurance, consider the provision for unexpired risk and the percentages that we have to remember. Okay. So in case of marine insurance, especially when we say marine insurance, it's insurance of the hull, like the body of the ship itself. Okay. Whereas things like cargo that is transported over the ship, that provision is maintained at the rate of 40 to 50%. Okay, and other marine insurance like the hull is calculated at your 100%. Is that fine? So I hope this was clear, this entire problem. So this is how revenue accounts for insurance companies are prepared, and the different types of incomes and expenses that are generally put under it.